Hi, I'm Chad with Zelle HR Solutions. It's great to be a associate member of NAM and get to work with all of these wonderful nonprofits and the surrounding communities. Excited to talk about the topic today. And I also have Jordan Arndt with me here today. She's going to be starting off the discussion, but I'll pass it to Jordan so she can announce herself, and then we'll pass it on to Linda and Ralph after that.
Thanks, Chad. Thanks, Ian. And unlike Ian, my favorite part about my day is when I do get to do HR. So it's a lot of fun, and I appreciate working with folks like you who do give back in such an impactful way to our community. So appreciate you guys and appreciate you guys for being here. Like Chad mentioned, my name is Jordan. I've been with Zelle for 3 years now. I come from the HR world. Specifically, I have a couple years in nonprofit too. So I understand a little bit of your day-to-days, which I can very much so appreciate, but we've got a lot going on in our legislature right now, namely the new Department of Labor salary threshold overtime rule. So that's sort of something that we're going to focus on. I'm going to explain a little bit of the context and then what we're doing here at Zelle for any clients, customers of ours, any advice that we can provide. And then I know Linda and Ralph both have some awesome content and context for you guys as well. So a little bit about what is going on. Our previous salary threshold before July 1st of this year was just at about $35,000. What that means is that someone who was considered salaried and exempt, they would have to make at least that in order to be classified as that. This doesn't account for anyone who is hourly and non-exempt. So they've rolled this out in 2 different phases. We've already experienced one on July 1st. The second phase is coming on January 1st, this upcoming January. The first phase was to increase from that 35,000 number to an annual salary of about 44,000, just under 44,000. So that required us to increase anyone who was considered salaried and exempt, who was making between about 35,000 and 44,000, to either increase them to hit that new minimum or reconsider and reclassify them as potentially exempt or non-exempt and hourly. It just sort of depended on their role. So I'll get into that here in a little bit, but phase 2 then is going to be an increase from the new 44,000 to actually $58,656. That's a big jump. That's going to affect a lot of our folks, a lot of our team members. It may require us to reclassify a significant population of our workforce. But we'll talk about how we can do that the right way and be ready for it. This is very dependent on a presidential administration. So our current presidential administration has identified the 35th percentile of salary in the lowest wage census region as sort of that minimum. Now, I know the Trump administration believes that's more of a 30th percentile. So we'll sort of see, after November to see if this is going to happen. But our recommendation is always to be prepared and then have a plan B if possible. The other pieces of this new rule include increasing the threshold for what we consider as highly compensated employees from 133,000 or to 133,000 on July 1st, and then all the way up to 151,000 on January 1st. That's considered the 86th percentile of full-time salaried workers in the nation. Additionally, we're going to have some auto increases. So starting July 1st, salary thresholds will update then every 3 years by applying the up-to-date wage data to determine what those new thresholds will be. So this is really an attempt to try and get salaries on the right track with how COLA is working, how inflation around us is working, setting some guidelines and some standards for how employers must handle the world around us. So lawsuits are starting, some big ones. So we'll kind of see what happens again. And again, with that presidential administration and all of that, there are a lot of things that are a little bit more up in the air. But in the end, the intention is really to make sure that lower paid salary workers who are doing the same job as their hourly competitors, they're spending more time away from their families. We're trying to hone that in a little bit. So what do we do? How do we do this? How do we tackle this? This is a big feat that we may have to overcome. First step is going to be audit current compensation levels of your employees, specifically those who are exempt and salaried. Determine which ones are going to be impacted by each phase. Hopefully you've done that for phase one since we're past that. But now get ready for January 1st with that 58,656 number. And then audit current compensation levels of employees who are subject to the highly compensated employee exemption as well, to see who falls below that and who we need to potentially adjust a classification or a pay for. And then verify that exempt employees' actual job duties meet one of those exemptions tests. So the Department of Labor, the FLSA, all of those entities kind of come up with this exemptions audit or test to determine if someone meets an exemption. Now, if someone meets an exemption, that means we can classify them as exempt and salaried. Now, if an employee does not meet the exemptions test, meaning they don't meet the administrative, there are like two others, a professional and a creative or something like that exemption, then they would have to be considered hourly and non-exempt. It cannot go the other way. So an exempt employee who does qualify for an exemption can be salaried. They can also be hourly and non-exempt, but someone who doesn't meet it cannot be salaried and exempt. For exempt employees who are earning less than the increased thresholds, decide whether you want to increase their annual compensation or potentially reclassify them as non-exempt and thus eligible for overtime. My highlight here is to make sure that you are doing that on a consistent basis. So if you have, 5 accountants maybe who all the same job, you can't make 2 of them exempt and 2 of them non-exempt. So make sure you're applying it consistently with the job titles in the roles that folks are in. Now with that too, you want to analyze job descriptions. Are the job descriptions up to date? Do they make sense for exemptions versus an hourly position? That's part of that audit and looking to see what's in place right now. Plan for the effect that commissions and bonuses might have. This might not be as applicable to the nonprofit world, but those would be considered part of potential calculations for pay. Consider revising some personnel policies as well to require, if someone does become non-exempt and eligible for overtime, maybe you put some parameters around how much overtime someone would be authorized to work. So there are a lot of kind of trickle down effects that reclassifying folks into different roles or pay statuses affect. So the last thing I want everyone to consider is consider staffing levels, whether you need to hire additional workers to reduce the need for non-exempt employees to work overtime. Maybe that means hiring an additional person as an exempt employee. But you'll also then want to consider the cost of benefits that hiring an additional person would cause. So a lot of pieces to account for. We're working on it every day here at Zelle. We're running reports, we're having the conversations, we're analyzing who should be exempt, who should be non-exempt, looking at those, job descriptions, comp analyses. There's a lot that goes into it. So that's a little bit of context and again, what we're doing here at Zelle, and I appreciate being able to share that. And I hope that we can be a resource for all of you. Now I know we've got our other partners, Ralph and Linda here. So I'm going to pass it over to whoever wants to go next and explain a little bit about things from your perspective and how you guys plan to handle this change.
Great. I guess I'm going to go next. Ralph just muted himself. My name is Linda Reinhardt, and I'm putting in the chat here a little bit about Collaborative Business Support. I'm the Executive Director for Collaborative Business Support. It is a network of independent consultants. We come together and offer client solutions from multiple perspectives. And we have a number of HR experts on our team. And so we're happy to help in any way we can. And thank you so much, Nam and Ann, for offering us this opportunity to speak with you today. I put together a few slides. It's really a repeat of what Jordan had just laid out for everyone. Can you see my slides? There we go. So
Yeah, we can
it-
see that.
you can? Okay.
Yeah, we can. Thank you.
Thank you. So the first slide is the language from the Department of Labor. A lot of times I'm an old lobbyist.
It's the general, it's not Shannon's personal line.
It's not showing on yours. Maybe switch your view. It's up in the upper right-hand corner. Well, there's just a couple here. I'll go through it quickly. The first slide is really just telling you what the title of the ruling and where it's found and under what section. As I was saying, as a former lobbyist, this was always interesting because there's so many rules and regulations out there, and you're trying to track what is it exactly that we're talking about. And then, as Jordan said, these are the current threshold is 35,000, and it's going to be the first threshold. The first raise went into the threshold went into effect on July 1. The next one's coming up on January 1, 2025, and then they have in the ruling that it will be automatically adjusted every 3 years. And then some of the key takeaways that would relate to you all. The first one is a repeat. The second one is what they call the highly compensated employees. And Jordan explained this as well. The last line here is that the proposed rule does not affect the duties test for the white collar FLSA exemptions. So what's the duties test, and what are the what needs to be met? So as Jordan said, a salaried employee is not the same as an exempt employee. You may still have to pay them overtime. However, if these 3 conditions are met, they may be exempt. So the first one is about whether they are a salaried employee. The second one is what their salary level is. And then the third is the duties test. There's on the last line here of number 3, there's a link to where you can find out more information as far as what the duties test is. But basically, it's, anyone who is managing an organization or a department who has direct authority over 2 or more full-time employees. They have the authority to hire or fire employees. There's also administrative level duties test, and that's related to if they're managing the general business or operations, and they have the discretion of independent judgment over their work and so forth. And then you have other specialized folks who are in the field of science, or teachers, or computer science, computers and IT, or outside sales. And then those have a different criteria. So it is good to go and check before you start reclassifying your employees if they meet some of these duty tests. So regarding NAM and the nonprofits, we looked into, could nonprofits be exempt from these rulings? And the answer is no, unfortunately. So they did, Jordan has a number on this. They did interview and take public comments from, I'm trying to think, it was like 300,000 or something, but this is the third revamp, and it has been out there quite a long time, and they did hear from a lot of nonprofits, but as Jordan also talked about, that there are a couple lawsuits out there, and so things could change. So I always ask, so what happens if you don't follow the regulations? Well, your employees could report you that they are not being classified correctly. It could instigate an investigation of your organization. You could be sued. And then, if it gets out to the public, it could be a PR nightmare. So as we mentioned, so far there have been 2 lawsuits filed in Texas. And so in Texas, this has been put on hold. In Nebraska, Nebraska law says that they follow federal regulations regarding this issue. So whether that would ever change in Nebraska, it's just something to watch. So Jordan went over what you can do now for compliance. These are the steps that everyone should be taking or should have already been taking up until July 1. It was also well put together in the PDF that Aaron just attached and went out by email as well. What the suggested steps are for everyone to take. And we're at questions and answer. And I will turn it over to Ralph.
I had to find the unmute button here, which if you know me is I never have a problem unmuting myself. So nice to see all of you. Lots of familiar faces here. Thank you, Jordan, and thank you, Linda. I will tell you, I will speak from 2 sides of the coin. So many of you know that I work at Lutheran Family Services as the Vice President of People and Training, but I also have a consulting business where I will work primarily, or where I do work primarily with nonprofit organizations. And what has been shared with you today, I don't want to rehash, but I do want to give you some thoughts or ideas as you move into your budgeting process or your strategic planning process for the coming year. Absolutely. I want to reiterate, if you haven't done a job description audit, you need to ensure that there's been nothing of significance that have changed in your job descriptions that would warrant a change in classification. If there has been, that's something that you need to address, and that goes beyond just the ruling that we're talking about. You always want to make sure that you are classifying employees correctly. The second thing that I would say is you also want to make sure, as you're looking into next year and you think, oh, this person is, under budget right now or under the threshold right now, I would add in, as you're planning for next year, what you anticipate a reasonable increase for the person to be, if it's 3%, if it's 4%, to see if it moves them over the threshold or toward the threshold, so that you can make a decision now rather than wait. You also want to make sure in the way that you communicate this to employees that it is stated that this is not an agency thing. So it's not a Lutheran family thing. It's not a NAM thing. It's not the organization. This is something that's being implemented by government regulation, and it's something that we need to follow. The reason why I share that with you is that sometimes organizations run into issues with employees feeling as though that messages aren't being transparent or that organizations are making arbitrary changes. If you explain to them why the change is being made and how it impacts them and the reason that the change is occurring, that can alleviate a lot of frustration on the part of the employee, and it can alleviate a lot of conversations back and forth between you and the employee for things that you may assume assume that they know, but they're not familiar with, or you may have assumed that you explained, but they didn't fully understand. So it's really, really important that you make sure that you do develop a communication plan for that. Lastly, and Linda touched on this, and I do want to share this with you, having gone through this not too very long ago. The critical thing, there are two critical things with this, not only the salary threshold test, but also when you're looking at the exemption testing, that you follow the exemption testing for each of the particular areas. So the executive, the administrative, the creative professional, and the technology. You don't just look at one item under the exemption testing and say, oh, they qualify. They have to qualify for under the exemption testing for each of the points that are listed, and that's really critical. The other thing that I do want to share with you, failure to follow things like these regulations can really come back and impact you. Not too long ago, we had a Department of Labor audit. We did receive a complaint. The complaint was filed with the DOL. The DOL came in and did a audit in the organization. We were fortunate that we had a great auditor who was very kind and said, we will only audit one particular area of your organization. But they did stipulate, if we find that there's reason to believe that practices have not been followed organizationally, we will ask that you open your records for the entire organization for the last 2 years. So imagine going through an audit of that kind of significance unplanned, that you might need legal support for, that you might need HR consultancy support for. It is time consuming, it is significant, and it can really sort of upend your operation in terms of the amount of time you'll spend dealing with auditors until you actually reach resolution. So you've got great resources between the three of us who have presented today. And I would say, if you're confused, if you don't understand, if you're, wondering one way or the other, if you need to do something, please reach out for help and ask. Again, we are expected to follow this ruling in Nebraska until otherwise told. So if you're not planning for the increases in January, I would start planning for them now rather than later, so that you and your boards can work to ensure you're on the same page, and you can begin preparing employees for any changes that they might encounter. It's always better to let them know sooner rather than later, especially at the beginning of the year, when you can just get started off on a clean slate and move forward, rather than have lingering questions and things along those lines. So please reach out if you need help. Again, great resources available to you. And Anne, I think I'll turn it back to you on that note.
Great, thank you. Thanks to all of our subject matter experts here. I know there's been some activity in the chat with some questions, but feel free to unmute yourself, ask a question. This is your opportunity to get some great expertise.
And I was just quickly going to say, there is a NAM DOL salary threshold in the chat function right now. There's a PDF in there. And I assume Aaron's going to send out the one-page document with the threshold rules and what to look for in there. And that also has Connection Points Consulting, Collaborative Business Support, and Zelle HR's contact information on there as well. So I assume that'll be coming out to everybody, Ann.
Yes, it will. And I think we'll also put it on the website under our public policy areas. So that way anybody who's maybe not in the CEO or HR group, or not yet a member of NAM, they'll be able to find it there as well. So great. And I did drop also in the chat box the link where you can learn more about all the HR services that our three folks businesses offer, and how to get in touch with each of them. So I think this is great information, and I guess I have a love-hate relationship with the DOL. We want to be able to pay our employees fairly a living wage, what they need, but it's also going to be, you know, there's a budget impact, and how do we find those funds, especially because it can be challenging in these times to raise money. And so I think Ralph's exactly right. Let's start preparing for it now. This will be challenged in court, as has been alluded to, but we won't know that for a while. So make sure that you're protected and you have it in your 2025 budget. And if it does get struck down or doesn't go anywhere, the phase 2, well, looky there, you've already are ahead of the game with your budget. So any other questions, comments, thoughts? Okay, well, with that, stick around. If you think of anything, feel free to drop it in the chat or unmute yourself and raise